Hi, I'm David Stein of Money for the Rest of Us, and in this video I answer the question, will China overtake the United States? As a former investment manager, institutional portfolio manager, chief investment strategist for a $30 billion investment advisory firm, one of the ongoing questions in the decade plus I managed money is what will happen to China? How big will it get in terms of its economy, in terms of its stock market? You can't ignore China. China's gross domestic product in 2018 is just around $12.2 trillion. It's a big country. Now that compares to over $20 trillion GDP for the U.S. And by GDP, we're talking about gross domestic product. What is the dollar value of the output in terms of goods and services that the respective countries produce? Now, China obviously has much greater population than the US. Their overall economy is smaller, but really the way to look at it is what is the amount of output, the amount of production of goods and services per worker? That's called per capita GDP. Right now, China's only about 14% of US per capita GDP, so it's much smaller. It has room to grow. The question is, how will it grow? And will it grow fast enough to where it gets to be bigger than the US over the next decade? Well, there are some definite headwinds that China faces. First off, much of its growth has come through exports, the ability to produce goods cheaply and sell them to the rest of the world. Right now, China exports about 13% of the total world's exports. Their income level was about the same as Japan was during the 1960s. And from that point, Japan grew. Their export growth was about 17% per year. If China, given its much greater size, would grow exports at 17% per year, in a decade, they would comprise 40% of the world's exports. No country has ever been more than 20% of world exports. And the reality is the world won't allow that. The world will not allow China to export that much. There will be even greater trade disputes than what is happening currently. And as a result, if China is going to grow and continue to grow and get to be bigger than the US, the only way to do that is to produce goods and services that can be consumed internally. And the only way to do that is that the income levels for households needs to grow. And a way that economies can grow their income per household is to be more productive. Workers are more productive in producing goods and services. They're able to produce more with less effort. And that's what China needs to do. They need to dramatically increase their productivity. Now, there are three headwinds that impact China right now. The first is their workforce growth is slowing. The amount of those or individuals that are of employment age, it's not growing as fast as it was. If you have an economy where you have a lot of workers and the amount of workers entering the workforce is growing very quickly, that can allow your economy to grow faster because you have more workers producing output. But if your workforce is slowing like it is in many countries, then that makes it harder. And the only way you can increase output is to become more productive, to make investments that allow workers to be able to produce more for a given hour of work. These type of productive investments are done often through debt. And one of the challenges that China faces is that their investment in productivity enhancements, too much of it goes to state-owned companies. There's a misallocation of resources. China has huge debt levels in terms of its private sector and its state-run enterprises. And the banks, which are owned by the Chinese government, they tend to favor lending money to state-owned enterprises because at the end of the day, they believe they'll get paid back because they're owned by China. But the problem is with so much of that capital going to state-owned enterprises, they are much less productive. The workers just aren't able to produce. It's a lot of just bureaucracy. And as a result, the type of projects that should be financed that can increase productivity, it doesn't happen. So you have misallocation of resources, and that will hurt China. And finally, you just have state intervention. About 10 to 15% of employees in China work for state-owned enterprises. But what you find is, as private companies get bigger and bigger, the state, the government gets more involved. It meddles more, and those companies become less productive. In order for an economy to continue to grow quickly, you have to be able to innovate, to be flexible. If you have a lot of top-down type management, it becomes very, very difficult to do that. So those three headwinds impact the ability of China to overtake the U.S. You have misallocation of resources, and along with that you have high debt levels, you have a slowing workforce in terms of workforce growth, so not as many new employees coming to work, and you have intervention from the state that leads to unproductive investments and just sheer unproductivity. That doesn't mean China, even if it just muddles through, is not going to continue to grow. I think it will, and its stock market valuation is much less than the U.S. So even if China muddles through, their stock market could do better than the U.S. And I invest in China. I think you probably should continue to invest in China, but I don't think China will overtake the U.S. in terms of its overall economic growth per person. Someday, just given its overall higher population, its economy, in terms of overall output or GDP, will be higher or greater than the U.S. Hey, if you have any questions on this video, you can go ahead and leave those in the comments. Thanks.